Hello, I'm Toycam, welcome back to our third channel finance video. Today I wanted to start off my disclaimer nice and early that this video is not going to contain any paid sponsorship or any recommendation of anything you should invest in, any investment account you should sign up for, or anything like that, but instead it's just here to help people who now realize that yeah, if I invest my money, let's say $1,000 a month for 25 years, then with pretty decent returns you can earn $1 million in just that 25 years because of how compound interest works and how much your money can grow your money, whereas if you spend that $1,000 a month on things right now, you'll have nothing in 25 years, or even if you leave that money lying around in a bank account, even $1,000 a month, then obviously that £1,000 actually will go down in purchasing value by about, like 2.5% times the value. That's right, £1,000 worth of goods and services in 1989 would cost $2,500 because inflation is a big real thing, which is why you need to invest on some level, not just for the idea of future returns, being a millionaire is nice to anyone's level, but also you need to hedge against inflation. So now that you understand you need to invest, a lot of people have been asking, even personal YouTube friends, like, so how exactly do you do it? And I'll admit, it's a shame this isn't taught to people. How exactly do you invest in things? Because if you hear about something you'd love to invest in, you're like, oh yeah, I love the idea of stock charts. I really want to, be involved with this, but how exactly does it work? Let's explain in today's video, but let's start by explaining what you can invest in, because this video is obviously going to have a focus on stocks, but also it's worth noting if you don't believe in the way stocks work, if you don't like any of that stuff, my point of this is not like invest in the stock market, it's real good, because you might not trust the stock market. You might not like the idea of buying shares in companies. You might not like giant multinationals. So you can actually invest in many other things if you want to. And you might be like, but what does that really mean? So assuming that we're all on board with the idea that money now is worth less than money in the future to businesses, whereas if you're putting money away, you can earn a return on that. There's lots of ways you can do this. And one example of a wacky one that you probably have heard about somewhere is the idea that you can trade oil. That's right. A lot of people who trade oil don't have physical giant warehouses full of it, because instead you can just invest in the oil's futures market. And it sounds really complex when I say oil's futures, so just to keep things real simple, here is the graph of the price of crude oil from the last year. As you can see, it's gone up and down a lot. If we go to 5 years, you'll see a lot more change, because you know what, fun fact, price of oil goes up and down a lot. And you might be wondering, how do I invest in oil to make money from where it goes from, what is that, like 30 something dollars all the way up to $70? How do I make money on that if I think I know what's going on? Or if you just believe in investing in it long term, you shouldn't invest in oil long term. But if you want to invest and have fun with it that way, you can buy something called a futures contract, which again sounds complicated, like oil futures. I don't think oil has a future personally, but what it is someone will agree to sell you oil at the fixed price, in a year's time. So for instance, right now the price is $51.63. Some oil company will sell you in 1 year's time oil for $51.63, which sounds really confusing, but if the price goes down in that time, then they're selling you something you have to immediately offload for less money. If the price fall goes down to $40, you've lost $11.63. But if there's an oil crisis in the Middle East and you make a lot of, something goes crazy, it goes up to $70 something again, you would make $20 because you could buy something for $51 that you could immediately then offload. You don't need to physically own the oil in this case, but an example where you might want to physically own the thing, because like, actually that sounds even more crazy and corporate than stocks for a lot of people. One that a lot of people like if you're a very conservative investor, if you dislike the idea of complicated structural systems, is gold. You can just invest in gold if you really want to, and by investing in gold, you can do it via ETFs, share funds, blah, 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 or you can actually just buy a piece of gold and then you can sell it later. There's no taxes on selling gold in the UK and in a lot of countries, because historically money equals gold in a lot of ways. I've covered this in a second channel video actually, but basically gold equals roughly money, therefore gold increases at a pretty steady rate. It's gone up from, as you can see right here, about 1100 in 2016 to 1500 in 2020. It's not an insane return, but the cool thing about gold is it rarely has big crashes. It's a thing you can invest in. You can buy just physical bars that you store with you, and if the world goes to a crazy wasteland, people might be willing to buy that gold off you. I mean, your mileage may vary on that one, but still, gold is a thing you can invest in, and there's no like complicated things going on. However, the thing that most people recommend is going to be, if you're on the internet, it's going to be like a Bitcoin or something, which might actually be smart. These are wildly high risk, but wildly high return investments. If you invest, just for the fun of this one, if you invested, I don't know, $100 in Bitcoin when the price was 100, even literally going back the same 5-year period, actually, let's go to. So we go to 2015 over here. You can see the price is $220 US. Right now, the price is 9,442, which means if you invested in, I don't know, $1,000 worth back then, a month, let's say, over 12 months. So you put $12,000 in. That $12,000 would go up by 5, 9, 45 times, which means your $12,000 would be worth about just under $500,000 today. And even after inflation, that's a pretty good deal. So obviously there are huge crashes. There are people who bought at their peak in 2017 that still haven't made their, they've still lost half their money effectively. There's lots of other, by the way, Bitcoin is just an example. It's the one people know. There's Ethereum. There's a billion other small ones if you believe in those. Personally, I do have some Litecoin lying around because I mined them back in the day. Actually, I think I got rid of them and I traded them in for Ethereum at this point. But, I have some money in this, but it's not a stable long-term thing. If you want to be a millionaire in the long run, you want to get rich slowly, you don't want to get rich hoping for crazy turns that can go up and down by this amount, not when you're putting such a huge amount of your savings and your lifeline into it. That's why most people just say, hey, the stock market, it's got, a long history. If we go to 5 years, this is the S&P 500, which is the top 500 companies in the S&P. Stocks, by and large, go up. Some companies go out of business. Some companies have stock crashes that they never recover from. But if you buy a collection of let's just say you individually buy the top 500 performing shares in the S&P, which is a stock market in America, or if you want to, for instance, you can pick any market if you want to. But let's say you buy the top 500 shares, then you could hedge against that risk because of all those companies, the majority go up over time, which is why from 2009, where the price, it would have been about $1,000 worth, you could have tripled your money by now in stocks, which is, admittedly, that's a big bull run. It is highly, highly anticipated. There'll be some dip at some point, but even when you include these dips, over time it makes money. I covered this more in the first video about why you should invest money, etc. But the point is, how exactly do you invest in this is a question so many people had. Like, hey, I want this. Hey, I want this, but how? I have the money. I want to do that, but do I go to the city floor and I go yell at a person? No, so the reality is there's lots of investment accounts. Here's one called Vanguard that's usually recommended in the finances communities, but rather than saying, oh yeah, here's one website, I recommend it, because I don't take advice from people who are seem suspiciously like they're going on one thing. I believe this has low fees. I don't have an account with them yet. I've actually been looking into like switching over ISAs because the fee of 1%, which is the standard for most places, is like eventually going to start being a problem. If you want to cut through that, look for the lowest fees. It might be these people, it might not be. So instead, you can just literally Google investment account and then like USA if you're in America, or UK if you're in the UK, or because Google knows your location, it can just do that nonsense for you. And you know what you'll find? Like, oh yeah, I'll go to fidelity.co.uk and I'll see their investment accounts. That took a while to load. Can you trust a a website that doesn't load that fast? And then you can see like what are their fees and charges, what sort of investments can we, by the way, I think it was these guys who have super low, like 0.35%, but it goes down to 0.2% over 250,000. I do not have 250,000, so 0.35%. And then you can choose what you're investing in. Every company will obviously have different options, but for the most part, every investment account you'll find in your country will allow you to either invest in individual shares sometimes, or invest in just the traded funds off again, because right now most companies, there's a lot of them, will have their own little funds where you can buy into their big pool of the top 500 shares. It gets really complex to set like that, but just think of it this way. Instead of buying one share, which can go up and down wildly like the price of a Bitcoin, instead of buying one share, you're buying 500 at one time. But instead of you buying 500 shares because you can't afford one of the top 500 shares, the bank that you're working with, whether that be Fidelity or Vanguard or Barclays or Santander, love a good Spanish bank. Are they Spanish? I have to assume they're Spanish. I mean, Santander is a place in Spain, and they say Santander rather than Santander, which would be the English pronunciation. But, if you want to invest with these places, they're going to buy lots and lots of those 500, which they'll increase as more people invest in. Like you're pooling. It's a way to basically not guarantee, because nothing is guaranteed. Risk is always a thing. The way you make money is by risk. But over time, it has been proven that or not proven, it has been shown for any period in history, especially any 25-year period in history, you will make money investing in this way, because with all of those different risks hedged, once you hedge every single risk out there, unless global capitalism falls and the concept of a company share goes bust in the next 25 years, you'll make some money. How do you do it? Pick a bank. The reason that I didn't mention anything in that first video about how do you do this is because it is quite easy. It sounds like it shouldn't be. It sounds like investing in shares is something where you have to go to a stock market floor and look around, or like, only people who have all the money in the world can do it. Wait, here's me on a green screen, but instead of a green screen, you have to have a room filled with money if you want to invest. But that's actually a lie. You don't. You just go to Google and you type in investment account, or you get recommended one by someone you know or care about. But I'm not going to do that in this video, because these videos aren't here for me to make a profit and be like, yeah, although maybe that'd be nice, that'd be fun. But these videos are here to encourage you, go invest your money somewhere if you care about your future. And most people do, but they don't think about it, because there's lots of things to care about in your immediate future. Why care about your 25-year future from now? Anyway, with that said, thank you for watching. And yeah, there's no plug, no sponsor. Just subscribe or something if this video helps you, because I'll see you all in another one. Next video will probably be a McDonald's review, which is going to be a weird break in the sequence of like finance, maybe cool things you can do, like something flying vlog, and then, oh yeah, also McDonald's. Because what's the point in being rich if you can't enjoy a good old bit of McDonald's? Am I right? I might be wrong. Goodbye.